Hey, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned into our YouTube channel for our weekly video analysis. If you like this video, please give us a thumbs up and consider subscribing. So today I want to start with the market regime. Are we in a bull market or a bear market, and how can we tell? Because we need that for our trading bias. I still got some concerns because short-term breadth really got hit the last few days, and also yield spreads started to widen. And we'll look at some oversold setups using the momentum composite indicator. So it's been quite a chaotic few days in the markets, to say the least, with the big decline on Black Friday, a rebound of some sort on Monday, and then a big decline on Tuesday. And here we are again rebounding on Wednesday as I record this. And what happens when we get these big chaotic moves is I always take a step back and I look at the market regime page. And that's a page where I've got my composite breadth model that defines if we're in a bull or a bear market. And I check those signals to make sure we're in a bull market. And so I'm on the Trend Investor Pro main analysis page, and there you can see some links at the top there. And there's the market regime page. And I'm just going to go to this page. And what I do is I update the custom breadth model and the signals. And we've been in a bull market basically since May 29th, 2020. And that is actually now 18 months. And then I've got these signals down here on a table. And there's the current signal. And this was as of the close on the 26th. And we were 380 days into the signal. And there's the change, and there's the average per month. And then if you go down a little bit further on this table, which is available for subscribers, there you can see the signals that we've had. And I'm going to go over to Amy Broker to show you the rest of the charts that come on this table. So here is the Amy Broker chart showing the signals. I build these indicators and models in Amy Broker, and then I test them, and then I keep track of the signals here. And again, we've gone back to 2003. But here is the composite breadth model in the first window, and you can see it's green when I think we're in a bull market regime, red when we're in a bear market, bull market, and you can see we got red in late February 2020, and we did miss the COVID crash, and then got back in late May 2020 and caught a pretty good advance going here. And you can see you can absorb corrections here. There's the September-October 2020 correction. There's the 5% pullback, and it stayed green. And below we have the 5 inputs, and these are explained in a detailed article and video on the Trend Investor Pro website here. But the main takeaway here is that we are in a bull market still, and that is important because it helps you set your assumptions. And if you assume that we're in a bull market, then you assume that a decline is going to be a pullback within a bigger uptrend. In other words, it's more of an opportunity than a threat. And so we're going to work under that assumption when we look at some of these other charts. But before I do that, I want to look at the short-term breadth situation for the S&P 500. So here's a daily chart. It's a little bit more granular, and we've got the 50-day moving average here. And you can see that the S&P 500 SPDR was up like 10% in 7 weeks. That's a big move, and we did hit a new high. And so it started coming back down a little bit, and then just got really whacked on Black Friday. Again, bounced on Monday, got whacked again on Tuesday, and is bouncing again today on Wednesday. But I was pointing out in a commentary on Monday and Tuesday that we have broken resistance turning into support. We have the rising 50-day moving average, and I can even add some retracements here. And you can see that we've retraced 33 to 50% of the prior decline. So that means we were coming into a potential support or a support zone or reversal zone based on these 3 items coming together on the chart. And so we're getting a bounce now. The question is is this bounce going to have follow through, and is it going to end the pullback? And I think we're in for a bit more volatility, because if I look down at this indicator here, we can see that 80% plunged below minus 80% twice in the last 3 days. And so that means more than 90% of stocks in the S&P 500 decline. That is broad-based selling pressure in the S&P 500. And so basically, Mike Tyson always says everybody has a plan until they get punched in the face. And so the S&P 500 was punched in the face on Friday and again on Tuesday. And so it needs to stabilize after that. And so that's why we might have a little bit more volatility before this little pullback ends. And I do think it's a pullback within a bigger uptrend. If you look at this pullback in September here, there we had a couple of 80% down days there, and we needed to recover from that. And the way we did that was we got an 80% up day in mid-October with this breakout here. So I'm looking for some sort of strong breath signal to signal that the bulls have regained control of the market after this pullback. Now, another thing I'm watching is the Zweig breadth thrust. And this is only based on S&P 500 breadth. It's not based on NYSE breadth or NASDAQ breadth. And if you see somebody charting the S&P 500 with NYSE breadth, throw that chart away, because 1/3 of stocks in the S&P 500 come from the NASDAQ. And if you're just using NYSE breadth, you're not playing with a full deck. So here is the Zweig breadth thrust indicator. And you can see it was below 0.40 in September. And that was a negative. And that negative needed to be reversed with a positive. And as I said, that positive was at 80% thrust in mid-October. And the Zweig breadth thrust went back above 0.61 in late October there to get a Zweig breadth thrust as we broke out. That was a little bit late. And normally Zweig said you had to do this within 10 days, go from below 0.40 to above 0.615. I kind of relaxed the rules a little bit and said if it goes above 0.615 within 1 to 2 months, it's okay for me. But right now, we're below 0.40. And that means we've had a lot of downside participation, because this indicator is advances divided by advances plus declines, a 10-day moving average. And when it gets below 0.40, that tells you that the number of advancing stocks has been very weak, which implies the number of declining stocks has been very strong. And so we need to undo this negative before we can say that the pullback has ended. Now, another reason for a little bit of concern is we've seen an uptick in the corporate bond spreads. They're widening a little bit. And when bond spreads widen, that means a little bit more stress coming into the credit markets. Now, this is the AAA spread in the middle window and the BBB spread in the lower window. BBB corporate bonds are the lowest rated investment grade bonds. And this is the yield on the BBB less the yield on the 10-year. And you can see, there's the surge when we had the COVID crash. And you can see the market went down. And then these yield spreads came down hard and the market went up. And these yield spreads pretty much narrowed into the end of June, and the market went up, and the yield spreads have been flat since July, but they have ticked up a little bit. And in the commentary at Trend Investor Pro, you can click on these charts and it'll take you to the Fred database. And I'm going to look at these because what we've seen here is an uptick in the yield spreads fairly significantly over the last few weeks. And we got above the August high here. So this is the highest yield spread that we've had since March for the BBBs. So there's a little bit more stress in the credit markets, and that kind of reflects the chaos we're seeing in the stock market. And if we look at the CCC spreads, we can see that, they moved up a little bit in early summer and then stalled out and then moved up over the last few weeks as the market moved down, but they're above the spring highs here. So there's a little bit more stress in the credit markets. And that also suggests that we could see a little bit more volatility before the market finds its footing and is able to stabilize after these big down days on Friday and Tuesday. So it's been quite a busy week here at Trend Investor Pro because I wanted to address some of the recent chaos and look at some of the ETFs that we're setting up. And there's a lot of volatility out there, but this is what I covered on Tuesday in the written commentary and the video, and then also on Thursday in the written commentary and the video. We went over IWM hitting the support zone and 5 indicators that I use for oversold conditions in SPY. 4 of the 5 became oversold. And we've also got lots of oversold readings in other ETFs as well. And IBB is setting up with a wedge. So check out trendinvestorpro.com if you're interested in seeing those videos and the analysis. So one of the indicators, or the main indicator that I'm using to identify short-term oversold conditions in a bigger uptrend is the momentum composite. And this is part of the Trend Investor Pro Indicator Edge plugin. If you go down to the bottom right of the Stock Charts ACP page, you see plugins, and you click on plugins, and there you can find out more about the Trend Investor Pro Indicator Edge plugin. There are 11 indicators available. So over on the left, I went down and I've got the momentum composite selected here. And I've also got Stochh RSI, and these work in tandem. So there are 3 things we need. First, we need an uptrend of some sort. And this is XLI, and we're above the rising 200-day moving average. You can see we came down really hard and went below the 200-day on Tuesday, but we're coming back up here on Wednesday. And then you can see the momentum composite went to -5. So it was very oversold on Tuesday's close. And I'm going to put on the crosshair so we can see that exactly. So there we are, we're at -5. And a few days ago, we were at -3. And so when this gets to -3 or lower, I consider the condition to be short-term oversold. If you look here back in September, we were oversold. But just because you're oversold doesn't mean you have a buy signal. Oversold, when you're in an uptrend, is an alert. It says, be on guard for some sort of bullish reversal short term. So we got oversold here on the 14th, and then we got oversold again on the 20th, and again on the 21st. So we're coming down here to the 200-day, and then we get a bounce. And you see that second indicator is Stochh RSI. And I'm looking for a pop above 0.80 to trigger a little bullish momentum signal. And we got that pop here. And then we got another little test. And whenever you get a test of the prior low, that gives you a resistance level, a short-term resistance level to work with. And so you see here, there's the short-term resistance level to work with. And then we got a breakout there. So now we got a breakout and a new high. We've come down really hard, and now we're oversold. And so I'm watching Stochh RSI for a pop above 0.80 to get a bullish signal short term. And here's the Cybersecurity ETF, which I'm also watching. So you can see here, it became oversold twice over the last 6-7 days, but we haven't gotten a bounce just yet. And we've got a little resistance level there now to work with. And so we're oversold. That means we need to watch it closely for a bullish catalyst. And if we get a breakout here, that is going to be bullish. Or if we get a Stochh RSI pop above 0.80. So if you'd like to know more about trendinvestorpro.com, you can click on the link in the description below. If you like this video, please give us a thumbs up and consider subscribing. Thanks again for tuning in, and I'll talk to you again next week. Have a great day.